Did you know that there are Turkish stocks that could make you a fortune in the next few years? These are companies that have great businesses, great financials, and great moats. But the best part is, they are still massively undervalued by the market. As Mohnish Pabrai puts it, you can invest in Mangaresk businesses at Grahamian prices. I am talking about single-digit PEs for the top-quality companies instead of 30s and 40s. While the US stocks are trading at a very high valuations, these Turkish gems are selling at dirt cheap prices. In this video, I am going to tell you what these stocks are and why you should consider adding them to your portfolio if you are looking for new ideas. Two of these companies are the ones Mohnish Pabrai, one of my favorite investors, has invested in. I don't know if he has investments in the other two. He talked about them before, but even if he has invested in them, it is still under the regulatory limits where he has to declare. But before we dive into that, let me just say that this video is not about politics, it's about finance. I'm not here to tell you who to vote for or what to think about the candidates. I'm here to tell you how the election results will impact the stock prices of these companies. And I am here to help you make informed and profitable investment decisions. Because that's what lunch investing is all about. Making money while eating lunch. And maybe drinking some Coke. And I believe Buffett once said that you can't optimize two variables at once or something similar to that. So I am going to focus on finance and finance only in this video. If you want to get more into politics, I am sure there are lots of other channels that cover it and you can basically check those out. So the elections were held on May 14th and Erdogan got 49.5% of the votes while the opposition leader got 44.88%. And for the parliament, Erdogan's party got 35.4%, but their alliance has got almost half of the parliament as far as I can see. And I will leave the full Financial Times story in the description in case you want to go deeper. There will be a second round of voting between Erdogan and the opposition leader on May 28th. So what does this mean for our four companies? How will they perform under different scenarios? Will they thrive or suffer depending on who wins? And how can we take advantage of this opportunity? That's what we are going to find out in this video. But first, we are going to review each company and their business model, their financials, and their moats. This will take up most of the video, so don't get impatient. Trust me, it's worth it. Because you need to understand these companies before you can understand how they will react to the election results. And then, at the end of the video, we are going to analyze how each company will be affected by different outcomes of the election. So stay tuned and let's get started. And don't forget to hit the like button and subscribe if you enjoy this content. The first company is Reysas. I covered Reysas 3 months ago on my channel. You can find all of the videos in my channel. And if you want to make sure you won't miss my next videos on these companies, subscribe and hit the bell so you'll get a notification when I post a new video. Now the most important thing with Reysas is their real estate portfolio. And actually, the real estate is owned by another company called Reysas GEO, but Reysas Logistics owns 61.94% of that company. In the video, I calculated Reysas Logistics share to be worth at least $750 million liquidation value, and I can easily say that this number is the very least what it's worth. I think it's probably worth much more than that. They also own Turkey's largest freight train fleet, Turkey's largest truck fleet, a car inspection business where every car in Turkey has to go through once in every 2 years. So at the end of the day, each of these businesses have very good economics. But that's not even the best part. The father-son duo that run the business are very capable capital allocators that invest money at 20 to 30% annual returns in dollar basis, and their market cap is still very small, a little over $400 million. They still have lots of room to grow, and it's actually been up quite a lot this year. Year to date, it is up more than 40%, and in 1 year, it's up more than 500%. And since I published the video, it is up 53%, all while dollar against lira is up 23% in the last year. The second company I want to talk about is Tav Airports. This is an amazing company that runs 15 airports in 8 countries. What I love about Tav is that they make most of their money in dollars and euros, so they don't have to worry about Turkish lira losing value. They also made a very smart move by buying Almaty Airport in Kazakhstan during the pandemic. This is not just a lease, they own the whole airport forever. And Almaty is a goldmine for them. It will be their main source of income in the future. In 2019, they made 373 million euros, but that was at Atatürk Airport in Istanbul, which is now closed. They got compensated by the government for that, and now they have Almaty instead. Plus, they have 30 years left on average to run their other airports. That is a long time to enjoy the profits. Their business model is also very attractive. When they take over an airport, everybody wins. The government or the municipality gets rid of the headache of managing the airport and gets paid for it. The airlines get better service, and so do the customers. And Tav gets a steady stream of revenue from fees, rents, and services. The key in here is to not overpay for the airports they acquire. And I think they have been very successful about that. Unlike some people who overpay for their Netflix subscriptions and never watch anything. I did some calculations for Almaty in my last video about Tav, so you can check that out later. But in short, I expect them to make at least 140 million euros from Almaty alone in 2 years. And they have 14 other airports to add to that. So in total, I believe they will easily bring more than 350 million euros in a couple of years in profit. Right now, their market cap is around $1.2–1.3 billion, so with today's prices, you are getting Tav Airports for just a little over 3 times earnings. And this is a high quality business with a huge moat. No one can compete with them by building new airports nearby. Unless you have a time machine and can travel back to when the land was cheap and available. And if you compare them with other airport operators, they have much lower multiples compared to them. Some of the other airport operators trade at 14, 17 or even 21 times earnings. I didn't check if there were any anomalies with their earnings or not, but even if we use the lowest multiple of 14, Tav Airports market cap would be around $5 billion. That is more than 4x return on your investment in 2 or 3 years. The third stock I want to talk about is Coca-Cola Icecek, or CCI for short. CCI is a Coke bottler that is based in Turkey, but they are operating in 11 countries. They have 896,000 sales points and $2.3 billion in revenue. That's a lot of Coke. They had 4.6 billion liras in profit for 2022, and their current market cap is 64 billion liras. So their price to earnings ratio using last year's earnings is almost 14, which is high for a Turkish stock, honestly. But the official inflation in Turkey is around 50%, so their 2023 profits would be 50% higher without any real growth. But looking at the price of Coke, we can see that it is up more than 2.5 times in 1 calendar year. So I think we can expect 2023 profit to be much higher. So using 2023's earnings, I think we are looking at a high single-digit PE ratio. And honestly, CCI is now an international company. Only 32% of their sales volume comes from Turkey. And they are operating in countries like Pakistan and Kazakhstan, where they are still growing, and I would expect that population's consumption of CCI's products would increase alongside with their GDP. And maybe their waistlines too. But hey, that's good for business, right? Finally, the Coca-Cola Corporation actually owns 20% of CCI, and they have, I believe, 2 board seats at the company, and they really like CCI, and I believe they are the go-to company for the region they operate. In the end, nobody else will bottle the Cokes in those countries other than Coca-Cola Icecek. So that brings an incredible moat around the business, and when it comes to Coca-Cola's moat, I think that is also very big, and it's been one of Buffett's greatest investment for decades for a reason. And I will leave a video from Mohnish Pabrai's channel where he discusses the Coke's business if you want to know more about that. The fourth and final stock I want to talk about is Dogus Otomotiv. This is a company that imports and sells some of the biggest car brands in Turkey, such as Volkswagen, Audi, Porsche, and so forth. They have been doing this for a long time and they have great relationships with the brands. They also have other businesses related to cars, such as rental, used cars, insurance, and inspection. They are like a one-stop shop for car lovers. They also pay a generous dividend of over 10%. Last year, they made almost 8 billion liras in profit, and this year, they are on track to make more than 10 billion in liras. In the first quarter, they had 3.9 billion in profit, and their market cap is only 27 million liras. That gives them a PE ratio of around 2.5, which is ridiculously low for such a great business. And their business is all in Turkey, but they are fixing their prices to mostly euros, and in times of high volatility, the prices of the cars they sell change weekly. So they may not have a direct euro or dollar income like Tav Airports, but it sure is pegged to stronger currencies, at least for the majority of their business. They recently bought a REIT business that was owned by the same group. But I don't think they overpaid for it. They got some valuable real estate assets that could be useful in the future. The market didn't like this deal very much, and the stock price dropped by over 40%. But I think that was an overreaction and a great buying opportunity. The stock has still delivered market-beating returns in dollar terms in the past years, and that is just another great business with deep moat at a ridiculous valuation by the Turkish stock market. So what happens after the elections? I know I talked a lot about the businesses, but I had to, because I really want to explain these businesses and why their valuations are out of order. If Erdogan wins, which looks more likely since he had 49.5% of the votes in the first round, there is not really that much of a change. Erdogan was the president when Mohnish bought into Reysas, and Reysas still returned incredible results, simply because it was a great business at a bargain price. Because in the long run, that's what matters. Take Dogus Otomotiv, for example. Their earnings yield, in my calculation, is at a whopping 40%. 40% is insanely high, no matter how you slice it. And they are not a Silicon Valley tech company. They are not handing out crazy stock-based compensation. They can, and in my opinion should, cut the dividend and buy back the stock like there is no tomorrow. That's how cheap I believe the company is. And also, the valuation itself is the catalyst. And that is for Dogus Otomotiv. When you look at Tav or CCI, honestly, they are global companies rather than Turkish ones. They happen to be based in Turkey. And if either of them traded in a developed country's stock market, I honestly think that their valuation would be much, much higher. Of course, I am not denying the risks. Yes, they should have lower valuations due to certain things. But if it wasn't for them, they wouldn't be so cheap in the first place. So if Erdogan wins, I don't think much will change. Valuations, at least in the short run, I expect them to stay the way they are. And also, most of the foreign investors have already left the country, like 4 or 5 years ago. So on the other side, what happens if the opposition wins? In my opinion, that is much more complicated. At first glance, the valuations can change to the upside because the foreign funds that have left the country for political reasons might come back. But I would expect there to be a period where both the local investors and the foreign funds wait to see what kind of economic policies the new government will make. After that, I don't honestly expect the valuations of the companies to go even lower. But we can actually see them stay stagnant at least for a while. Or if everything goes right, the stocks might even recover to the places they deserve. So the thing that investors should watch out for, in my opinion, is how the managements of these companies use their money, their returns from their investments, and most importantly, their corporate governance. Most of the other companies in Turkish markets, in my opinion, fail in either one of these. So I try to make sure to cover the ones that pass both in my channel. Finally, if you have watched the last Berkshire Hathaway meeting, and by the way, you definitely should, Munger said that there are too many very smart people with lots of money chasing very few opportunities in the market. In his day, things were so much easier. So if you want to catch fish, you have to go where the fish are. And I think Turkey is a good place to go fishing. That was it for today. I hope you liked it. And if you did, please leave a like, comment and subscribe. Other than that, I'll see you in the next one.